traders, and welcome to the Friday wrap-up, May 8th, 2015. Well, it's a Friday, and it's NFP Friday. Traders is brought to you through FXCL Excellence in Trading. Traders, please come and visit us at our site at fxclearing.com for your trading solutions. Well, the big numbers came out for NFP, and we're doing this presentation after that, and we'll get to that in just a second. If you would, let me introduce myself to you. My name is William Gilda. I'm your moderator for the Friday wrap-up, which is done after the New York stock market closes every Friday, where we go over daily charts. We're going to go over 16 daily charts, do some analysis, and see what we can expect probably in the week ahead. Traders, I started trading in the year of 2006 and 2008. I retired from a wonderful 27-year career in the fire rescue department out of the great state of Florida. Traders, I went on a 3-month holiday 9 days later to Thailand. Well, it's 2015, traders, and I'm still here. Traders, I do trade the Forex market every day, and even on the weekends, I'm looking around, seeing what's going on. As it is Saturday, my time, as I'm 11 hours ahead of Eastern Standard Time. Traders, like I said, I trade the markets every day. I am able to trade all 3 trading sessions, only about 2 hours in the New York session, 3 hours at the most. That brings me up to close to midnight. But I do trade all 3 sessions every single trading day. All right, that's enough about me, traders. Let's get over to the risk disclaimer. Forex trading has a large potential rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Most importantly, traders, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, traders, let's get over to this week's commentary. Let's take a look real quick, being that it was NFP Friday, at the indices and how they closed. The US 30 closed positive 1.59%, the S&P 500 up 1.35%, NASDAQ is up 1.17%, with the Russell 2000 up 0.60%. And we'll just take a peek here at the Eurozone. The DAX is up 2.65%, the FTSE 100 is up 2.32%, the CAC 40 is up 2.48%, and the Eurostoxx 50 is up 2.62%. That's just a little bit of what happened with the indices after the closing of the New York stock market session, and everything is, of course, closed for our weekend break. Traders, quite a nice week. Last week was pretty stable. There were some trades that didn't work as usual, but I think 60 or 70% of the trade plans that we put out on the market opening preview that we do every day before the London Open seem to work out pretty decently. For those of you who live on the East Coast of the U.S. or California, you're very fortunate because you're catching a lot of good pips on the New York, like an hour to 2 hours before they close. Unfortunately, that's about 3 o'clock in the morning for me, so I do not catch that part of the New York session. So today, what we're going to do is we're going to take a look at some daily charts. Remember, these are daily charts, but we're looking at price action and we're looking at patterns, and that's the key to what we're going to be doing today. And I want you to really just pay attention on what we're doing. These are naked charts. You're going to see a green line on the chart, and all that is, that's a 200 exponential moving average. There's no indicators, there's no MACD, no stochastics, there's nothing. These are naked charts, just absolutely price action. That's what we want to look at for today. And let's start with the euro dollar. Here's the euro dollar, came up, and as if you take a look left of the chart here, you can see what does it hit. It has hit previous resistance. Pretty interesting that we've had 2 red days now on the euro dollar to the downside, and Friday closed as a negative, and I'm sure that was due to the NFP number release, as it didn't meet expectations. They were expecting 226K jobs, and they only got 223. However, the markets did gain dollar strength. So for the week coming ahead, I would look for this to continue to the downside. And on the lower time frames, we should start to see that Monday or Tuesday. And if we get past that support, if you take a look at that third candle to the left with that big wick there, if we get below that, we have a nice wide open space all the way down to the next support, which is a lot of pips. Remember, this is a daily chart, so these are a lot of pips. So I would be looking for in the next week to be selling the euro dollar. And the Swissy should be doing the opposite, right? They're correlated, the euro and the Swissy, and it is. We have 2 up days on the Swissy. The concern here is that the Swissy is moving into the 200 exponential moving average. Now, that's a lot of pips away there. That's like, oh gosh, that's over 200 pips away. So not really a concern. However, if you were trading next week, again, I would look to be buying the dollar Swiss, and it's resuming its trend to the upside. Let's take a look at the pound dollar. Very interesting situation with the pound dollar. Pound dollar gave us an update on Friday, and I'm sure that was due to the elections and all that stuff going on. And also, it really didn't take into effect it gave us a little bit of a pullback, but look at where it went to. It went to the 200 exponential moving average, almost to the pip, and was rejected at that point and came back down. And it probably came back down after the NFP numbers because the dollar became very strong at that point. So this is a very interesting pair to trade come our next Asia session, because what are you going to do with this? We're at resistance. It has been in an uptrend. It's given us a fib. It's still in an uptrend, but it's sitting on a daily 200 exponential moving average. Could be a little tricky. We'll have to assess that in the market opening preview on the next Asia session, which for most of you on the East Coast is Sunday evening, and for us in Asia, it is on Monday morning. Let's take a look at the dollar yen. The dollar yen is really sideways. There's really no price action here. It's really not done very much. If you do not have the dollar index chart on your platform, just use the dollar yen. That'll give you a good idea of what's going on with the dollar. And you can see basically that the dollar is just maintaining its strength. We don't see a lot of movement as far as increasing in its strength. Hasn't taken out any significant highs, hasn't taken out any significant lows, and it's just basically going sideways. I was able to put a dollar index chart, and we'll see that at the end of the slides. We'll take a look at a dollar index chart, and you'll see what I'm talking about. Let's take a look at the euro yen. It's been bullish, and we talked about this on Thursday, that I was expecting that this was going to bounce and go to the downside. It's exactly what it did. Traders, the 200 exponential moving average on a daily chart is very, very powerful. And price action usually does not just fly through the 200. And if it does, most of the time it'll retrace back. So pretty interesting to see what we're going to see here coming in the next Asia session, where we're going to take this. You know, this is in an uptrend, right? So, you know, we really want to buy this. So we'll just have to reassess this come the beginning of the week. Let's go over to the pound yen, the beast. The beast is extremely bullish. I'd only be wanting to buy this pair. We're far away from the 200 exponential moving average. It's spiked out of left of the chart resistance. So my bias for the pound yen coming into the next week is we buy this. Now we want to be careful now because Tokyo finished its holiday. It came back online on Thursday, and they're talking about stimulus and some, I wouldn't say quantitative easing, but some easing for their currency. So we need to be really careful with the yen pairs coming into next week. Let's take a look at the Aussie yen. If we take a look at the Aussie yen, you'll see that, again, you know, what I said, it loves the 200 exponential moving average. And price here, even though there's a lot of pips there, remember this is a daily chart, but price now is above and has been above for the last 4 days, almost all week last week, has been above the 200 exponential moving average. So my bias in the Aussie yen is that I want to buy this. I really don't want to sell this as long as this daily chart stays above the 200. If it closes below the 200 exponential moving average, I will be looking to sell this. I would not want to buy this, right? We want to buy this as long as it stays above the 200. If it closes below the 200, all bets are off. We've got to do a reassessment and see what's going on here. All right, let's look at the Aussie dollar. Pretty wild pair this week. It is bearish. This pair is bearish. There's no change of trend here. It has not taken out significant highs. If I was able to show you the whole chart, you would see that this is a bearish mode. It keeps coming down, does a fib, comes down, and it gave us a blue day on Friday. And really it's almost like a doji, pretty much. It's really an indecision candle. So we'll see what happens in the next Asia session. What happens with the Aussie? Remember, the Aussie dollar is a commodity pair, so anytime you have news come out, it's definitely affecting the Aussie. And they did not have good data come out on Thursday or Friday in the Asia session. So kind of surprised that we have this. Well, I'm not surprised that we have a doji candle, but it's going to be interesting to see what happens coming into the new week. I'm looking to sell this, my friends. This is bearish. This is way below the 200 exponential moving average. We're showing lower highs and lower lows. So my bias for next week is let's sell the Aussie dollar. Traders, looking at the euro pound, I don't look at this a lot. I use it as a tool, but you can see that the pound is a lot stronger than the euro. And look at those two big red days we had. Wow, sometimes you wish you would trade in the daily chart, huh? What a nice trade this was. Where does it stop though? Look at the bottom of the last candle on the right of the chart, right down to support. Dead stop in its tracks, and what does it do? It bounces back to the upside. So we'll take a look and see what happens in the next Asia session if we start our day with a blue candle. But this to me looks like it wants to bounce and wants to continue back up. I'm really expecting in a month or so to see this come back up to this 200 exponential moving average. Depending on, now that the elections are over, it should calm down. So the pound should stabilize and it should start its bullish action again. Really, it's pretty surprised that we had a down day. I'm not surprised that we had a down day on Friday. Let's take a look at New Zealand dollar. I love trading this pair. It's been a little wacky lately. It is trending nicely to the downside, but if you take a look left of the chart where we're at right now, we are at support. This is severe support. If you look to the left of the chart, there's a lot of candles at the same price level, and I would be looking for the bounce come Monday and Tuesday next week, and I would be looking to buy this. At this point, I'd be looking to buy this if we get a blue start at the next Asia session. However, the trend is bearish, but you have to admit, traders, this is a pretty ugly chart. It's pretty sideways. There's a lot of indecision candles, so you basically have to trade what's in front of you, but it's not a pretty chart at all. All right, let's move over to the dollar CAD, the loonie. Pretty sideways most of the week this week. Didn't do a lot of action at all. Moved here and there. We had 3 down days, then we had an up day, and then Friday was a down day. They had data come out, and I have to be honest with you, I do not know what their unemployment came out, so I can't refer you back to that. I don't know what that data was, but apparently it was to the, it wasn't, it must have been a good number because we have a red candle, which means that's CAD strength. Fall away from the 200 exponential moving average, so we don't have to worry about that too much. Let's look at the pound Aussie. The pound Aussie is also a bearish move here. Friday ended up as a doji candle, and I expect this to resume to the downside in the week ahead. This is going to be pretty interesting to watch, to be honest with you, because it's at some really critical levels where, you know, we could be saying next week that we have a change of trend here to the upside. We'll see how the pound acts. So this is going to be pretty interesting to watch. I don't trade the pound Aussie, and it's not that I don't like the pound Aussie. The problem with the pound Aussie is that the spread on this pair, for some reason, I don't know why, is really big. It's like 6 pips spread on this pound Aussie. So I don't trade it. I just look at it. I do not trade the pound Aussie. All right, let's take a look at one of my favorite pairs, which is the Euro Aussie. I trade this a lot. This is one of my regular currency pairs that I keep up all the time. And you can see here it is stuck at the 200 exponential moving average, and it's doing exactly what we expected. And I predicted this since Wednesday that this was going to bounce off this 200 and just keep bouncing down, coming back up, bouncing down. And it hasn't done anything substantial yet. It has not taken out any lows. And until it takes out some lows here on the daily chart, you know, we just want to sell this, but we want to be really careful because we're coming up to support. If you take a look left of the chart, and we're coming up to some support areas, so this is going to be a tricky pair to trade. But my bias is to the downside. If you take a look at this chart, spatially, it is bearish. Traders, this is the US dollar index chart, and as you can see, it is sideways. Like I said, if you look left of the chart, you can see all that sideways price action. Like I said, the dollar is not getting stronger, but it's not getting weaker. It's just maintaining its strength. And as the Fed keeps talking and things keep happening, it will remain that way. Now they're saying they think that maybe in June we'll see a Fed rate hike. I don't think these guys on these blogs and financial TV shows know what I think they just babble a lot. But we'll see what the Fed does. I don't think we're going to see an interest rate until the end of the year. All right, that does it for our daily charts. Traders, remember this is brought to you through FXCL Excellence in Trading. And again, please come visit us at fxclearing.com for your trading solutions. Traders, on behalf of myself, William Gilda, I thank you for joining me for the Friday wrap-up, and I'm looking forward to seeing you next Friday when we go over another 15 or so daily charts and look for the week ahead. Traders, have a great weekend, enjoy your weekend break, and we'll see you in Asia for the market opening preview. Take care, traders, and bye-bye.